Hey guys, so in this video, I want to talk about my concept of there being a very short bear market when we have one. And this is regardless if you think we're in one now. That's not what this video debate's going to be on, but feel free to give your thoughts down below. Or if you think that we're going to have a bear market in the next couple of months after we have another big boom to the upside sometime from now to the end of quarter 1. I'm going to back up my thoughts and opinions with some statistics, some things that have already happened, some of the normal patterns that we have. And it does make a difference, at least for me, for my bear market strategy, because I try to have a plan out for the bull run for alt season, a backup for it, a plan for the bear market, and a backup for it, which I've talked some of that overall in previous videos. I'm sure I'm going to discuss it more in future ones, but that's what we have in store today. So as always, if you've been here before, you get something from this, something useful, educational, entertainment, whatever it may be, never financial advice, of course, please do press the like and subscribe button down below. It helps me out. But regardless, let's move forward and talk about why I think there's going to be a short bear market coming up. So to start making the case for the shorter bear market, let's just quickly reiterate so we understand what normal is for a bear market based off of crypto history. So historically, crypto bear markets haven't always lasted years and years, though if you were in the bear market, it certainly can feel like it. Right? According to different data points, right? I mean, there's a bunch of people like Defiant or Volatility or Signally. They all take their own variables of whether they consider a bear market starting. We get the bull run, and then everything comes crashing down, flat lines, and then as Bitcoin and everything else, the full crypto market starts going upwards, we end the bear market. But where exactly we call it beginning and ending, that does fluctuate. So it's hard to say when things start, when things end, because no one agrees on it. But depending on who you talk to, like Defiant says that last bear cycles were 354 days, closer to an average or mean of 293, so less than a year. According to Volatility, they say that the bear market in 2013 and 2015 was 13 months, just over a year, and the 2018 to 2020 cycle was 26 months. Other sources like Zignally estimate bear cycles between 260 and 380. So regardless, we get around a year. That 26 months I thought was a little strange. But statistically, we call it about a year, maybe a little bit less. So while crypto winters can really feel eternal, really all the data suggests that even the past bear markets are in fact multi-month, not multi-year. So this little historical context kind of gives us license to think that a compressed less than 12-month-ish bear, not only is that likely, it would be common. Again, I still think it's going to go shorter than that. I kind of suspect there's going to be closer to a 5 to 8 month bear market. Now, why would I say that? One, structural changes that favor a shorter bear market. One is there's a lot of very deep on-ramp liquidity from stablecoins. I know most of us are not invested in stablecoins, though staking them is a great method of just making a little bit of extra during the bear market. Talk about that in future videos coming up soon. But there's so much more capital that's just parked in stable coins like USDT, USDC, not even close to prior cycles. And this matters because when sentiment shifts, which if you guys have been in crypto for 5 minutes, you know that sentiment can shift, positive or negative, literally from a tweet, a news article, anything like that. But then a large portion of that dry powder that's sitting there, it's ready to redeploy into crypto quickly, and it does. It does now, it always will. Because stablecoins, they act like this on-ramp for both retail and institutional money. And institutional, they don't FOMO in, right? They buy a lot more constantly. They wait until prices get down to what they consider good. And in bear markets, there's going to be a lot of prices that they are going to consider good buying opportunities. I think that's going to greatly reduce how long we're in a bear market. Because stable coins are just going to provide that little cushion and also fuel for the next leg up when risk appetite returns, which can happen from just one crypto being bought heavily from an ETF news or some macroeconomic news. And if the money's already sitting there, specifically from institutions, and they start buying rapidly, what does retail do? FOMO in, buy rapidly, and we can get out of a bear market very quickly, or at least a bearish like sediment or bearish leg. which leads to with the institutional access and spot ETFs. There's a lot of ETFs out there, Bitcoin, Ethereum, Solana. We are getting more and more. We've had HBARs out there. We're expecting XRP, expecting Litecoin. There's going to be a lot more of these since they've now shortcutted the way that we can get ETFs. And yeah, they're going to be a lot of the larger crypto, which are what, again, institutions are going to buy. And I think there's going to be a lot more retail buying the safer, air quote, crypto. I know I will be. And this causes constant inflows of money, which again, bear markets stay bear because there's lack of inflow, not this constant upgrade. ETFs are going to provide this low friction way for large money to flow once it just looks good to them. It's going to happen quick. Yes, on the downside, they also mean there's going to be faster outflows. But crucially, when things turn, they'll also do a quick reallocation. They're going to jump in with those stable coins that they have, buy ETFs, because smart money and institutions, they're going to win and beat us out every time. So they will front run. And that's why ETFs are so important for shorting how long the bear market really is going to be. Tertiary, and this one I keep going back and forth on, is about low exchange reserves for Bitcoin specifically. I don't buy anymore that the Bitcoin halving is actually what started the 4-year cycle. I'll probably do a video on that before too long as well, but media about it can, right? So the exchange reserves for Bitcoin and a lot of other key tokens are nearing multi-year lows, and those are only going to be more significant as more ETFs are bought. Back to the point from just a minute or two ago. Lower supply on exchanges is going to reduce the potential depth of dumps when sentiment does go sour. Because again, more ETFs, more institutional buys, they're much more likely to hold. Not saying always, you can definitely see the outflows of ETFs, but they're more likely and less finicky and quick to sell as retail does. So in other words, not all coins are ready to be rapidly sold. Many are locked or hodled, which acts as a natural break on extended downside. And this appears to be happening more and more with a lot of the larger altcoins. A lot of them are in the top 10. In a year from now, probably a lot more there in the top 50. Next, and possibly the largest one, is regulatory clarity, specifically in the US and UK. And this is a thing that we're waiting for a lot of our crypto. Talk about this all the time with quant and HBAR. Historically, yes, it's the biggest wild card, but we know it's coming. There are now roadmaps and plans for CBDCs and everything to happen in the next 2 to 4 years. New stablecoin legislation like the Genius Act is going to come out with a lot more clear rules around the market structure, and it's taking shape. As regulation settles, participants, especially the big players, they can reprice risk more confidently. Less policy unknowns means less fear-based capital flight and a faster return of risk appetite once things stabilize. So what this means is that it's going to de-risk what crypto is. Right? More regulation, more certainty, more understanding as to what the hell it's actually doing and why we should use it and get people to use it. And we're probably or possibly going to follow a lot more of a stock or business cycle because of things like regulation and everything coming into it. And again, I think it's going to shorten the bear and extend the bull. And it's just a normal maturation process of an asset. So this has happened before with stocks, with gold, with almost every asset. As it matures and people get used to buying it and get confidence into it, the bull times go longer, bear shorter, because we understand its purpose and its worth. Also, for the next while, macroeconomics look really good for a long bull run, which doesn't really look like we're having, does it, guys? We're hoping for other pumps. But then the other side of that is if the macroeconomics are looking so good, it could really shorten the bear market. Many market participants expect central banks, especially the Fed, to pivot toward rate cuts in the next couple of quarters, like the next year. And if this plays out, risk assets like crypto could benefit a lot from this happening. Right? We know we're getting more rate cuts, maybe not in December. That keeps changing the percentage of likelihood. Likely going to next year in 2026, we know we're going to get a new Fed chair that's going to be kind of handpicked by President Trump. I think he's not going to pick someone that's going to drop the rates down to under 2%, possibly closer to 1%. Of course he fucking will, right? And this is only going to bolster and support a much larger, faster return. So this whole rate cut regime that we're expecting is certainly going to help fuel capital back into risk assets. Here in the US, we're looking at stimulus checks coming out Q2, Q3 next year. So if you think we're in a bear now, or we will by the end of Q1, it might only last a quarter or two as more money comes in, quantitative easing starts to really kick through, the money printers are coming. It's going to turn on for risk on assets. And like I just kind of described, or try to describe at least, it's going to, crypto in general is going to be looking more and more over time as a less risky asset. This all points towards more of a pumpamental approach, so to speak, to having a shorter bear market. And then finally, not for nothing, the whole ecosystem of risk management is more mature than ever, and it's only going to keep going. There are more high-level professional market makers, deeper derivative markets, and more robust cleared futures and options. There's more ways of buying crypto, both short-term and long-term. And again, people are getting more trust in it, so they're going to be doing it more. We're already seeing this. Now, this is going to help dampen the extremes of deleveraging, because in past cycles, this cycle, right, liquidation cascades often extended the drawdowns. Now, with the better infrastructure that's coming, some of those risks are kind of mitigated. Right? Retail and institutional players also have more sophisticated hedging options, which is really just going to help improve their ability to survive volatility without completely capitulating. In short, the market today pretty much just has better plumbing, which helps absorb all the shocks and shortens the path to a much better and resilient recovery. You can even see when we've had major dips, if you were in previous cycles or in crypto for more than a year and a half or so, have you noticed a lot of the major dips, we do recover faster than we used to. I know it doesn't seem like it because everything's down, but as we come down, a little recovery, down a little recovery, specifically on the larger crypto, they recover and stay stable a lot faster and longer than what they used to. It's just more proof of all of this. This comes in line with the idea that we're having a faster sediment rotation, meaning with real-time data, all the social media, all the sediment models that are coming from AI, participants react far more quickly than they did a couple years ago because news and information gets out a lot more. And this does mean dips reverse a lot faster. And this just kind of doubles down with the idea of there's more stable coins for fast entry and exit, which again, when we think of bear or bull markets, we think of selling or buying. But in all reality, it's a lot more of just volatility and the amount of inflows. We can have a lot of outflows, but if the inflow is also up really high, we can be in a bull market. So it's just the liquidity that's transferring in and out, and it's going to be happening a lot faster. There's also just a lot more risk awareness because we've had previous cycles, we've had a lot of whoopsies, right, with major liquidation events, and people are far more risk aware. So they're going to go more for the risk off assets, the upper crypto. You should be noticing a pattern here. We're also having more and more retail that are long-term holders, and stackers, not just buy and sellers, of waiting for an altcoin season, waiting for this to do a 10, 15x on pumps. A lot more people that are just buying cold wallets and storing their shit. Again, it's more stability. Stability favors shorter bear markets. Now, obviously, this is just a theory, nothing close to a guarantee. There are definitely valid risks that could, or facts and opinions that could shut this down or just change the train of thought. But the possibility of a shorter bear market is certainly there. And if the other option is a longer bear market, I'm going to plan for a shorter one because I'd rather assume I have this amount of time until everything starts to come up versus knowing I have a lot longer. I'd rather just have a plan for short and extend it so I'm better for the long. But like some of these real quick possibilities, ETF outflows, ETFs can go either way, right? It is possible it could just dump. Rate cuts could disappoint. There could be regulatory surprises. We're not expecting it, but let's say if something like the UK comes out and says, you know what, we decide not to do stable coins. Something like that could be massive change in the wrong direction. And there's always black swan events. There could always be something that comes out of Hades and just we don't fucking see coming. So to wrap this up, yeah, I think a shorter bear market is very likely. And again, I'm going to plan for it. And if I'm wrong, I can just extend the plan and I'm not going to be upset one little bit about it. So there's a lot of thoughts and theories about future bear markets, bull markets. Are we going to have another alt season ever? I've got my thoughts. Let me know if you're curious more of my thoughts on these type of theories in the market cycles. But more so, let me know what your thoughts are down below. What are your thoughts and theories about the bear market and future bull runs? I'll be here through it all no matter what. Hope you guys are too. Talk to you soon. Peace.